Let's get straight into it. We saw rand strength coming through yesterday, taking the unit to a session high of 702. And ever since credit and money supply data hit the markets, we've seen some weakness filtered through this morning, sitting now at about 705 to the greenback. Your view on that data that's filtered through and the impact it's had on the currency market so far?
Well, yesterday we did see the rand firm in the thin trading conditions associated with the UK public holiday, and we also saw US spending data come out, which was really positive, and it really helped rand bulls yesterday breach 7 rand 6 to the downside. But if we're likely to see that 703 rand breached further to the downside and have a go at the stab at 696, we have to really see positive data coming through. And this morning's data, even though it came out at higher than expected at 5.65% for the PSEE numbers, there's still some concern about the data, especially given the fact that the household credit extensions continue to slow, and the mortgage advances data as well continue to slow during the month. So there is some concern, and it did put some pressure on that numbers. But we do continue to see the rand being wedded to international sentiment, and if we continue to see EU confidence sour and the US data continue to show softness, we could see a move back towards 714, for instance.
Let's take a look at data that's expected out, because yes, we've seen on the local front credit extension and money supply numbers filtered through, but that likely to be overshadowed by Q2 GDP numbers. So your expectations on that front?
The Q2 GDP data is expected to have slowed to about 1.6% quarter on quarter from the 4.8% quarter on quarter that we saw the previous month. And we have seen some indications already come through from the mining and quarrying sector and the manufacturing sector, which is expected to have pressured those that GDP number lower and probably counteract the positive contributions from the finance, real estate and business services, as well as government services sectors. But if we don't see that deterioration, we could see the rand continue to strengthen possibly. But our expectations at this point is for a weaker GDP number and possibly a weaker economic activity in the second half of this year.
Of course, while we talk of the GDP number overshadowing the earlier economic data that's filtered through this morning, later on in the week, we've got the key event risk being the jobs number out of the US, and that likely to overshadow things all around, right?
Indeed, we have the ADP employment data coming out tomorrow, and on Friday we have the non-farm payrolls data expected to come out, and both those numbers are expected to be softer than the previous month. And what is concerning is that if hiring continues to ease in the US, it's really going to put a spin on the consumer spending, which accounts for about 70% of the US economy. And if we do see that happening in the second half of this year, we could see the US economy continue to slow, and that is a bit of a concern, especially given the fact that global growth continues to deteriorate and a number of institutions continually downgrading their growth revisions for the US and for the world as well.
Shireen, while we've touched on the likely pressure points, I mean, what has been a strong support factor for the local unit has been portfolio flows into the bond market specifically. What's your view on positioning there in terms of the likely support, the continued support that we're likely to see from that end?
Well, we saw a net inflow of bonds, but we saw a net outflow of equities on the JSE. If we continue to see that, we could see some pressure coming through on the current account, which is expected to have widened from the previous year. We're expecting a current account deficit of about 4.1% from last year. So we could see, we would have to see a continued increase in portfolio flows to cover that deficit on the current account, and it is a bit of a concern if we don't see that equity numbers coming through as well.